In early June 2025, something happened that wasn't supposed to be possible. In a single day, one payment system processed more than 650 million transactions. That's more than Visa, the card network that has sat at the center of global money for half a century, which averages around 640 million transactions a day worldwide. MasterCard, with about 450 million a day, wasn't even close. The system that beat them wasn't built in Silicon Valley. It wasn't built by a bank. It was built by the government of India. It's barely 9 years old, and it is completely free to use. It's called UPI, the Unified Payments Interface, and it is now the largest real-time payment network on the planet. Now, let me be precise, because precision is the whole point here. UPI didn't beat Visa on every measure. Visa still moves more total dollars, still rules credit cards and international spending. What UPI beat them on is the thing that actually shows who's winning the future: the sheer number of payments, and being the biggest real-time system in the world. On raw transactions, the homegrown Indian system passed the giant. So the question for the next 10 minutes is simple. How? How does a government project from a country that 15 years ago barely used digital money at all overtake Visa? The answer comes down to one idea, and I'm going to come back to it again and again, because every piece of this story is just one more expression of it. UPI won because it is open, instant, and free. Visa is a private, closed toll road. India built a free public highway right next to it, and everyone drove onto it. Let me show you the 4 pieces of that design. But first, feel the scale, because it's genuinely hard to believe. In 2025, UPI processed 228 billion transactions, up from 172 billion the year before. In December 2025 alone, it did nearly 22 billion transactions in a single month, a world record. It now handles somewhere around 85% of every retail digital payment in India. And here's the kicker. India, on the back of this one system, now accounts for nearly half of all real-time payments on Earth. Not half of India's, half of the world's. And while Visa's transaction count grows about 10% a year, UPI is growing around 40%. So how was it built to scale like that? Start with the foundation. The first piece is the most important word in the whole story: open. In most of the world, the rails that move your money are private and closed. Visa and MasterCard own their networks. To get on them, a bank has to issue you a card, and merchants have to rent a machine to accept it. Everything runs through their pipes, and they take a cut at the toll booth. India did the opposite. Its central bank, the Reserve Bank of India, set up a not-for-profit called the National Payments Corporation of India, and had it build one shared set of rails that any bank and any app could plug into. UPI isn't tied to a single company. It's an open standard. Think about what that does. You can use Google Pay, or PhonePe, or Paytm, or your own bank's app, and they all run on the exact same UPI rails underneath. Money sent from one app lands instantly in another, across different banks, no problem. More than 675 banks are connected to it. So instead of a dozen companies building a dozen incompatible walled gardens and fighting each other, everyone built on the same public foundation. That's why it scaled at the speed of the entire country at once. Open beat closed. That's piece 1, and hold on to it, because the next 3 all flow from it. The second piece is instant, and this is where the old card model quietly falls apart. When you pay with a Visa or MasterCard, it feels instant, but it isn't. Cards run on what's called deferred settlement. Your payment gets approved at the register, but the actual money moves later, often days later, passing through a chain of middlemen. Your bank, the card network, the merchant's bank. The merchant doesn't really have the cash for 2 or 3 days. UPI throws that whole model out. It settles in real time, directly from your bank account into the other person's bank account, in seconds, 24 hours a day, weekends included. The money is just there, instantly. For a small shop owner, that's not a minor convenience. It's a lifeline. With cards, your money is stuck in limbo for days, and you pay a fee for the privilege. With UPI, a customer pays, and the cash is in your account before they've left the store for free. Of course, merchants preferred it. Instant beat delayed. Which brings us to the third piece, and the one that drove mass adoption. Free. For regular people and small businesses, UPI is free. Or so close to free it doesn't matter. There's no merchant fee, no processing cut, none of the charges baked into card payments. Compare that to a credit card, where the network skims a percentage off every single sale. And to accept it, a merchant doesn't need an expensive card machine. They just print a QR code and stick it on the wall. There are now over 700 million active UPI QR codes in India. They're taped to counters in giant malls and dangling from fruit carts on the street and pinned up in tiny village shops. A street vendor selling vegetables can take a digital payment from a phone with a piece of paper and no fees at all. Now stack those three words together and you can see why it was unstoppable. It's open, so it's in every app. It's instant, so merchants love it. It's free, so there's no reason not to use it. Put those together and you don't get gradual adoption. You get an avalanche. UPI went from about a third of India's digital payments in 2019 to around 85% today. And the fourth piece is that the design keeps expanding, so it never stops growing. UPI didn't freeze in 2016. They keep bolting new things onto the same open rails. They added credit, so you can now pay on a credit line through UPI without a physical card at all, which directly threatens the one thing cards were still good for. They added UPI Lite for tiny offline payments where the network is weak. They added voice-based payments for the elderly and the visually impaired. They raised the transaction limits to pull in bigger business payments. The government's stated target is 1 billion transactions a day. They're well on their way. Every upgrade rides the same free, open, instant foundation. So every upgrade scales instantly to hundreds of millions of people. That open foundation has even started crossing borders. India is now exporting UPI to more than a dozen countries. It's already linked up with Singapore's system, and you can use it for payments in places like the UAE, Sri Lanka, Bhutan, and even France. A payment system designed for Indian street markets is turning into a piece of global financial infrastructure. Now, I'd be lying to you if I said this was a flawless miracle. So let's talk about the cracks, because free has a bill, and someone has to pay it. Here's the catch buried inside the success. Because UPI is free, it barely makes any money. But running tens of billions of transactions a month costs a fortune. Servers, fraud protection, engineering. The banks and the apps carry those costs with almost nothing coming back. So there's a real, unanswered question hanging over the whole thing. Who pays to keep the free highway paved? When the system runs on thin air, it strains. UPI has had outages, moments where the rails went down, and because the entire country now runs on this one system, payments simply froze nationwide. When everyone depends on a single rail, its bad days are everyone's bad days. And because the payments are instant and can't be reversed, scammers have rushed in, making fraud a growing problem the system is still racing to contain. The same things that made it spread, free, instant, everywhere, are exactly the things that make it fragile. So let's zoom out, because the real lesson here is bigger than India. UPI didn't beat Visa by building a better card. It beat Visa by refusing to build a card at all. Visa is a private, closed network that takes a toll on every swipe and makes you wait days for the money. India looked at that and asked a different question. What if moving money was just public infrastructure, like a road, that's free, open to everyone, and instant? And the moment they built that and let every bank and app drive onto it, the toll road couldn't compete. And if this sounds familiar, it should. China did a version of it with Alipay and WeChat. Brazil did it with Pix. India did it with UPI. Three of the biggest payment revolutions of the last decade, on 3 continents, all share the same DNA. Cut out the middleman, make it instant, make it free, make it open. The card networks spent 50 years perfecting the toll booth. These countries just built a free public highway right next to it, and the traffic moved over. So here's the question worth sitting with. The card in your wallet takes a small cut of nearly everything you buy and quietly makes you wait days for the money to actually move. For 50 years, that was simply the price of modern payments, the only road available. India just proved it doesn't have to be. So ask yourself, is the card in your pocket still the best way to move your money? Or is it just the one that got there first? The toll road you're still paying for, because no one where you live has yet decided to build the free version. Let me know what you think in the comments. And if you want to see how another country pulled off this exact trick and rattled the giants just as hard, watch this one next.